and people are getting nervous with paper. Gold, as I mentioned, closed just a fraction below $1,120 an ounce for the week, so it was a good time to speak with one of the gold experts that I really like, Natalie Dempster. She's traveling all over Asia right now, and she's the investment research manager at the World Gold Council. We've noticed that India just purchased 200 tons, not ounces, folks, that's tons of gold in the last last month. Ms. Dempster credited surging increase in demand by central banks in the emerging markets for sending prices higher. This is what Natalie had to say.
What we've seen are new purchasers emerging. You mentioned India. India bought 200 tons of gold from the IMF last week. The IMF wants to sell a total of 403 tons. It's not the only central bank. China has actually been the largest accumulator of gold in recent years. It's bought around 450 tons, and the Russian central bank has also been an important buyer. It's bought over 100 tons, and it's publicly stated that it would like to increase the percentage in its reserve. What's motivated it? The Chinese and the Russians have been perhaps the clearest.
Right.
They have made it clear that they're uncomfortable with their level of exposure to dollar-denominated assets.
People are just nervous. Countries are nervous with dollar-denominated assets, and they're starting to diversify. So it's not just countries. It's all of you. You're nervous, too. And it's not inflation. It's not deflation. If they just increase, slightly the need to diversify their reserves, it could create a tremendous surge in the price of gold. Just because gold market by itself is not that big. But you need to figure out exactly what percentage of your portfolio should be in gold. Now, what I hear is 1999, 2000. Let's buy anything with a .com at the end, no matter what. They will not make a profit until 2050, the company. But let me buy it. It's only $100 a share. Everybody's buying, .coms. That's not the right thing. And put all their money in the .coms because we're going to multiply it. Or let's buy this real estate market. Credit is free. Let me go out and buy some homes and I'll flip them. And as soon as I flip them, I'm going to make all this money. Well, instead of flipping the homes, people got flipped. You know that. You just don't want to chase something and put all your eggs in one basket. Diversification is not bad, but you need to have the right mix of assets. That's really the key, and you need to figure this out. That's really what you need to do. She has written this great article. It's, first of all, they have gold as a tactical inflation hedge and long-term strategic asset. Natalie Dempster is the author of this. If you want this report, I will send it to you. It's free.